Hello traders, it's 8:04 a.m. Chicago time on the 13th of April 2021. It is Tuesday and this is episode number 1971. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Sorry for starting a little bit late here, running a little behind today. Lots of traffic coming into the office. In any case, let's dive right into our convergent pre-market summary sheet. This morning, we have a neutral-ish sentiment. The market has actually tested. The S&Ps have tested way down versus the NASDAQ, which is pushing highs. And NASDAQ's incredibly strong today versus the others. But, you know, the Russell, the Dow have all dropped on news overnight and have recovered. The S&P is trading around its unchanged. Let me make sure my data is up to date here. Yeah, the S&P's up 2.75 points or 0.06%, pretty much unchanged, and that's how we're coming into today. So anyway, neutral day. We did dip overnight a fair amount. The U.S. CPI for March came in a little higher than expected. We also have a few Fed events today. Fed's George, Daly, Harker's speeches at 12, and we have the 30-year bond auction as well as Fed's Bostic at 3:30 Eastern. So far, the S&P's traded a fair amount, 213,000 contracts with pretty good range, 25 points, 25.75 points so far. The leader today is silver, again up 51.5 cents to 2% oil, back at the $60 handle. We're looking at May 2021 oil up 1.07%. The NASDAQ's pretty strong today, up 72.5 points or 0.53%. And gold is up $8, trading at 1741. The laggard today is the Dow, down 68 points. It is the weakest item I'm monitoring. The bonds are down a tick, and the 10-year notes are up one big tick. So that's where we stand. It's a bit of a mishmash of things. There's a lot that's in play that's making the market nervous currently. But the key element to take away is that we're not seeing sellers come in. We're not seeing people come in to truly sell and hold prices down. The big news is the U.S. is to call for a pause on Johnson & Johnson's COVID-19 vaccine. U.S. federal health agencies will call for an immediate pause on the use of Johnson & Johnson's single-dose COVID-19 vaccine after 6 U.S. recipients developed a rare disorder involving blood clots. The New York Times reported, citing officials briefed on the decision. This sounds similar to AstraZeneca and the pause that occurred there. And then the Eurozone Health Commission reviewed it and saw that I think there were 18 such cases, 18 such cases versus something like 30 million doses given, and they decided to move forward with that vaccine anyway because there's a shortage of it. So on that, the market responded. Let's take a look at what was expected yesterday versus what we got. Yesterday expected a minor pullback. Hang on one second. Yesterday expected a minor pullback early on, and then I was looking for it to shoot up into the 41.31 area, or at least continue to rally. Remember yesterday I said there's just not a very good case for selling this thing at this point. In order to sell this, we need an impulse down day, meaning 60 plus points down with a weak pullback to put the market back in neutral with the weekly, daily time framing up. Really, there's not much cause to sell. So that's what the primary scenario was. The secondary is a push through the overnight high of 41.18, a push through the all-time high of 41.21, and then selling off into 4100 for a test of 4100 from the top. We clearly didn't get that. Here's what we saw yesterday. This is the actual. There it is. Completely sideways on the open. We did push the 18 right away. We came back to 0850 to put in a very late and very low open, a very late, very slow opening swing. I think the opening swing didn't show itself till 22 minutes after the open. And then we come back to the middle. We extend the initial balance down, and then we ride all the way back up to take out the all-time high. We fought the prior high at 2150 quite a bit before pushing to 41.22.25, and then another deep pullback. So we get these deep pullbacks, consolidate in the middle, extend again to the upside, and close relatively strong, close near highs with a new all-time high of 41.2450. Very boring trading. Double distribution profile. Quite a bit went off in this 41.20 handle with value resting at 41.14, which was the overnight point of control. We did not get down into the 41.04 quarter. This is showing quite a bit of strength, and overall, we ended up with a recovery in the delta into the close. This is the first time where we see the delta really manage to recover on a rally on the close, whereas before you could see these big rallies with the delta just sitting sideways or going negative or falling even. So it's just not sure what to make of it, and the goal for me is not to try to read too much into it. That follows on to what we've done overnight. We open up completely sideways, just a very, very tight zipper in the Asian session. The Europeans come in, we sell off a little bit, and then we rally to new all-time highs in Globex to 41.27. And then we have this big sell-off, and then we come right back into balance. So we are trading currently right on top of the overnight balance, right on top of the upper distribution of Friday. What we're seeing here is a market that is not giving up any room whatsoever to the sellers. So we're seeing continued strength. As soon as it dips, it's being bought back up. And we moved almost to 4,100, and we are holding here in the overnight point of control, expecting a choppy open as a result. The lower distribution where the point of control was for the day session ended up having a low volume node, a key low volume node. So I'm looking for a retest of this 14 area once again. Let me clear my throat. It's allergy time of year. And so that's where we stand. We have almost no volume. Look at this composite. There's actually a composite right there. That is a volume profile to the right. There's a volume profile to the right, and you can hardly see that it's there with a little bit of lumpiness in the 41.14. If you recall, the last high volume node was at 40.6775, which is the balance of last week. There's just so little here below 41.10. Between 41.10 and 40.7273, there's just so little here. I'm just not seeing how a rotation down is likely to hold up very well. So once we turn over, we're going to see a lot of weak hands get pushed out, a lot of hitting of the bid, and a huge delta with really wide volumes once the sell-off occurs. I'm not advocating for the sell-off. I'm not celebrating the sell-off, but we do have quite a bit of weak structure beneath us. And so as we start to rotate down, be careful fading that move down, because the structure below is quite weak, is reasonably weak. So that's where that stands. The volume overnight's been pretty good, 220,000. So there was a fair amount of changing of hands on the overnight session. 220,000 yesterday. We ended up with 140,000 or 150,000. So there's a fair amount of activity, expecting that to carry over. But the location of the open tells me that we're likely to be pretty choppy and likely to continue to grind up. We have refuted the overnight low. So here's where we stand on the composite: higher low, higher low, higher low, higher low, higher low, higher low. You can make a song out of it. There's just very little here in terms of victories or effort by sellers, and therefore we continue to flow it up. If sellers are not going to be aggressive about selling, then the delta for the buyers is not going to be there, and the market is not able to sustain lower prices at all, because buyers are coming back in and buying it up. So I'm not seeing aggressive buying. I see two-way action throughout the day. There are battles at every fifth handle per the options, and it just seems like a lot of the volume's being pulled out of the futures into other assets. And you know, the fact is we still have poor structure below us, and we have thin air basically down into 40, 72, 73. So until it starts to sell off, it is a pretty grindy, boring trade. And that's just part of the business, right? I've been doing this for 21 years, and you go through these cycles. These cycles occur where it's just, you don't have to act. This is why, as traders, we don't take a good day. You know, I made $3,000 today, so I'm going to take $3,000 times 252 days in a year. Oh my God, I'm going to make almost $800,000 for the year. That's nonsense. We don't project that way. We take each day as we do a trade, and we take it as a discrete single occurrence event. In other words, just because I lost on my last trade doesn't mean I should pass on the next setup, because the next setup has almost 100% unique variables that go into it. And the same with day to day. Same with the day to day. When we trade, we have to take each day as it comes, and just stay with the auction. Stay with the auction, despite the fact that there's not much to do for most of the day. I'm finding myself looking for trades, seeing a setup and then scratch, seeing a setup and scratch, and it's like, you know, you're getting a scale out, but the scale out's not even close to covering the risk, which makes the R factor on trades pretty poor. And if there's one way to improve your trading, it is to improve your R factor. That's the biggest thing. If you trade randomly with a high R factor, theoretically the system or the edge is likely to be positive. Past performance not indicative of future results, but that's generally true. So if you're someone who's trading with 1-to-1 risk reward, then chances are, with a big enough sample, you would have to have 72 to 77 minimum win rate to realize a gain, if not to remain flat. If you go to something as small as 1.15 R, you start to see over 10,000 iterations, you start to see an equity curve that's slightly moving up. Just 1.15 R versus 1 R. So in an environment where we're taking full risk, getting a scale out, scratching the balance, take enough of those trades, and chances are you're just grinding out your account, if not losing. So it's best to just be patient, wait it out, wait for the market to give you what you need to pay attention to, or what you need in order to have strong setups. Okay, so let's move on to what we're expecting for today. However, I want to invite you to a webinar I'm doing tomorrow with Convergent Trading that covers the key components for setups and volume profiling. Let me paste for our YouTube users. Here's the link to register for it. This webinar is going to be basically an overview of volume profiling and how we work with volume profiling to see what the market is doing and to create setups using that information. I strongly urge you to attend. It is tomorrow. The webinar is tomorrow. Go ahead and register today. Again, it's at go-to ct.pro/key-vp-components. Capitalization matters. Should have checked that. We want to keep these lowercase, but key VP components, and I of course put it in the YouTube chat. And if you're confused by this, just to make sure you're following me on Twitter, twitter.com/futurestrader71, and I will be posting the link up there sometime this morning. So I want to remind you, tomorrow, a public an open webinar about key components for setups and volume profiling. I think you might find this useful. No matter how you trade, no matter what you trade, I think you'll find this useful. Let's take a look at what's expected for today. Okay, so what are we looking for in terms of the plan of action for today? This morning, opening against the point of control, VWAP, and mid. Expecting chop, looking for a dip. The dip can extend down to as much as 41.14, so 14 down here, 14. Looking for an impulse back into the open, looking for the OS high to be taken, and ultimately looking for a trip up to 41.3175, the next measured move high. We have a clear rejection of the overnight sell-off, so the expectation is any dip is likely to move us back towards the highs. The inventory overnight's 88% short in the S&Ps, so I'm looking for a push into this 31 zone. Okay, the secondary scenario, and this may take all day. Secondary scenario, same as always. Open auction again against the point of control, against mid, against VWAP. Push into 41.27. Peter out probably in the 41.30 area. Look for an impulse down. Consolidate back at the overnight point of control. Squeeze to 14 and then start to walk us back towards the 4100. Looking for the 4100 area to be tested. 4104 quarter, which remains open as single prints, looking for that to be the downside target. So a test to 27, move to 04, or test to 14, push to 31, and beyond. To infinity and beyond. When in doubt, buy the dip, as they say. So that's what I'm going to leave you with. Good luck today, and don't forget to register for tomorrow's event. Key components for setups and volume profiling, and the link is in the YouTube chat, and it's also on my Twitter. Again, go to twitter.com/FuturesTrader71 and follow, and you'll be notified when I post about it. I'll catch you tomorrow morning and tomorrow afternoon. Take care.